Today, I'm going to walk you through a concept that I've often discussed in tweet threads, but now you'll get the complete understanding. At the heart of successful investing is liquidity, which is growing globally at about 8% annually. This rate is the baseline hurdle your investments need to overcome just to maintain their current value. If your investments don't at least match this, your future purchasing power will diminish, effectively making your future self poorer. Now, when you add global inflation at currently around 3% to 4%, the total hurdle rate you need to overcome is about 12%. This means your investments must achieve a 12% return annually just to keep pace with global economic growth and inflation. This is no easy feat, yet it is critical for preserving and growing your wealth. Without surpassing this benchmark, your asset allocation will lead to a poorer future, which highlights the importance of strategic investment choices. Understanding and planning for this hurdle rate is crucial for anyone looking to secure their financial future.
Today, I want to delve into a concept that is fundamental to successful investing, one I've often discussed in tweet threads and other formats, but now you'll get a comprehensive understanding. The key idea here is liquidity, which is the lifeblood of global financial markets. It's important to grasp that liquidity is expanding globally at about 8% per year. This 8% growth in liquidity acts as a baseline hurdle for your investments. Simply put, your investments need to earn at least 8% annually just to keep pace with this expansion and maintain their current value. But there's more to it. We must also factor in global inflation, which is hovering around 3% to 4% annually. When you combine these two figures, you end up with a total hurdle rate of approximately 12% per year. This means that for your investments to grow your wealth in real terms, they must achieve returns exceeding 12% annually. It is a daunting challenge, but crucial for preserving your purchasing power and ensuring financial growth. Why is this 12% hurdle rate so significant? Because if your investments fall short, your purchasing power will erode over time, leading to a poorer financial future. Essentially, every dollar you invest needs to work harder to outpace both liquidity expansion and inflation. Failure to do so means your future self will have less wealth and fewer opportunities. This is why strategic asset allocation and investment choices are more important than ever. You need to be mindful of where you allocate your capital and the potential returns those investments can generate. Diversifying your portfolio and seeking assets with strong growth potential can help you meet or exceed this hurdle rate. Understanding and planning for this 12% hurdle is not just a financial strategy, it's essential for anyone looking to secure and enhance their financial future. By keeping this in mind, you can make informed decisions that align with your long-term financial goals and safeguard your wealth against the challenges of a dynamic global economy.
Subscribe our channel and press the bell button to get our video notification. And like the video.
This pattern is part of what I refer to as the exponential age tech trend, which applies to crypto as well. Crypto follows a similar cycle, which we can describe as crypto spring, summer, fall, and winter, mirroring the presidential election cycle and other cyclical patterns. Crypto tends to perform well in the spring. However, 2020 was an exception due to the pandemic, when crypto saw significant gains in the spring, but less so in the fall. Typically, the most substantial price movements begin in the fall, similar to the Nasdaq's behavior. So I anticipate that this cycle will resemble the ones from 2017 and 2013, where we didn't see an early surge in excess liquidity, but rather a gradual accumulation over time. With this understanding, you can see the importance of recognizing and navigating these cycles.
As we navigate through the investment cycle, it's important to understand how capital flow influences market performance. Historically, when people have more money to invest, markets tend to strengthen, leading to increased opportunities for growth. Looking ahead, 2025 is shaping up to be a particularly strong year for the tech sector, and this positive trend is likely to continue through the remainder of this year, especially as we move into the summer months. Historically, both summer and spring have been favorable times for investing, often marking periods of substantial market gains. This pattern is part of what I refer to as the exponential age tech trend. As technology continues to evolve rapidly, these trends become increasingly relevant, and we can see similar patterns in the cryptocurrency market. Just like the tech sector, crypto follows its own cycle, which we can describe as crypto spring, summer, fall, and winter. Interestingly, these cycles mirror other well-known cycles, such as the presidential election cycle, highlighting a broader pattern of market behavior. In general, crypto tends to perform well in the spring, setting the stage for growth as the year progresses. However, 2020 was an anomaly due to the pandemic, which caused crypto to experience significant gains in the spring but less pronounced activity in the fall. This deviation was largely due to the unique economic conditions brought on by the global crisis. Typically, the most substantial price movements in crypto begin in the fall, similar to the patterns observed in the Nasdaq. This is when the real price action starts to unfold. My expectation for this cycle is that it will resemble the ones from 2017 and 2013, where we didn't see an early surge in excess liquidity, but rather a gradual accumulation over time. This slow buildup allows for more sustained growth and market stability. Understanding these cycles is crucial for making informed investment decisions. By recognizing the cyclical nature of these markets, investors can better anticipate changes and position themselves to take advantage of upcoming opportunities. This cyclical perspective helps.
Let me introduce you to what I call the everything code. I haven't shared this with many people before, but it offers an intriguing perspective. By analyzing liquidity, we can make educated forecasts about market prices. When applied to the Nasdaq, this model suggests that by June 2025, we could see the index reaching around 27,000. The question is whether it peaks then or somewhere between June and December, but the key is the overall direction. This projection aligns with long-term logarithmic trends, which point to a target of about 30,000 for the Nasdaq. This is the target I've been considering. It might end up being slightly lower or higher, but the exact number isn't as important as the directional trend. This upward trajectory is crucial to understanding when we might expect a larger market correction. For those interested in crypto, the same principles apply. Using this cycle, we can anticipate a peak of 400,000 for Bitcoin. While the specific numbers may vary, the focus should be on understanding these directional trends to better navigate the market landscape.
Today, I want to introduce you to what I call the everything code. This is a concept I've developed to help us better understand and forecast market trends, and I'm excited to share it with you. This code focuses on analyzing liquidity, a crucial factor in determining market behavior. By examining liquidity trends, we can make informed predictions about future market prices. When we apply the everything code to the Nasdaq, it suggests that by June 2025, we could see the index reaching approximately 27,000. This is a significant target, and the question remains whether this will be the peak or if it will occur sometime between June and December. The important takeaway here is not the exact number, but the overall direction of the market. These projections align with long-term logarithmic trends, which indicate a potential target of around 30,000 for the Nasdaq. This is the target that I've been considering, and while it might end up being slightly lower or higher, the precise figure is less important than understanding the market's upward trajectory. Recognizing this directional movement is crucial for anticipating when a larger market correction might occur. Now, let's consider how this applies to the cryptocurrency market, which operates under similar principles. For those interested in crypto, the same cyclical trends offer valuable insights. Using this cycle, we can anticipate a peak of 400,000 for Bitcoin. Again, while the specific numbers may vary, the focus should be on the broader directional trends. Understanding these trends is essential for making informed investment decisions. By recognizing the cyclical nature of both the tech and crypto markets, investors can better anticipate changes and position themselves strategically. This cyclical perspective is vital not just for timing investments, but also for formulating long-term growth strategies and achieving financial success. The Everything Code provides a powerful tool for analyzing market trends and understanding liquidity's impact on prices. By focusing on directional trends rather than exact figures, investors can enhance their ability to navigate the complexities of today's financial markets and secure a more prosperous future.
Subscribe our channel and press the bell button to get our video notification. And like the video.